The market is absolutely pumping after what Jerome Powell just said. You can see the Dow's up, Nasdaq's up almost 2.4%, S&P 500 is up 1.4%. This came after a very nervous time for the market because we did just get Black Friday and Cyber Monday sales numbers, and they both were record numbers. We had GDP revised up this morning from 2.6% last quarter to 2.9% on an annual rate. So Jerome Powell was speaking this afternoon, and he definitely signaled some bullish things for the market. Now, I want to talk about that. I also want to talk about what CZ just did. He actually just deleted a tweet after he fired some shots at some other big exchanges, and one of the largest stocks in the world, one of the ones that people love, retail investors love, has a big event here today. And I haven't really heard anyone talking about it, and it could definitely push up the stock. So we're going to talk about all this. If you don't mind, there is a link to moomoo underneath the video in case you want some free money, some free stocks. You can sign up with that link. Just deposit on the platform. There's also a link down there to Trezor in case you want a cold storage wallet for your crypto to keep it safe. Now, Jerome Powell just spoke, and he says that we could see smaller interest rate hikes starting in December. So we still have the next CPI reading in about 2 weeks. After he said this, the market's pumped drastically, but don't think that this is the only thing that he said. A lot of people are only reporting this, but he still says we have a lot further to hike. So keep that in mind, right? It's not all just roses here. Benjamin Cohen had a tweet storm when this was happening. Inflation remains far too high. Without price stability, the economy does not work for anyone. It will take substantially more evidence to give comfort that inflation is actually declining. The truth is the path ahead for inflation remains highly uncertain. We need to raise interest rates to levels to bring down inflation to 2%. The ultimate levels of rates will need to be higher than expected at the September meeting. So we do have a lot of excitement, but we have to keep in mind that he still is very focused on raising rates. So if you think that he's going to raise rates by 50 basis points and then 25 and then be done and then start lowering them, it sounds like that's not going to happen, at least with what we know right now. Now, he does say that we will have to see what happens in the future because the rate hikes have not really affected the economy fully yet, and we know this. It takes 6 months plus for the rate hikes to really come down to the economy. So they are, I think, just going to slowly start to lower the rate hikes or just kind of pivot a bit. They aren't going to flip totally to reducing rates, but they are going to lower them a bit. The rate hikes in the future from 75 maybe to 50, do that for a little bit. Once they start to see a severe shift, maybe they'll start doing 25 and then stop altogether. But it's not like we are expecting them to, again, stop raising rates anytime soon. It sounds like they are going to continue to do this and continue to raise rates. Now, the market loves this. They love hearing that we're only going to see 50 basis points. This could be about what we expected. I mean, typically we see about a 2 to 5% increase whenever we see that they're not going to raise rates as much as some market participants thought. Like when we heard that they were only going to raise by 75 basis points last meeting, this was kind of priced in, I believe, like a week before we actually had them announce this, and the market shot up, but it shot up about 2 or 5%. It's not like the market continues to race up for a long time. We have to see a lot of other things happen, but this would be a really good step. And if we do see 50 basis points, I think on the day of the meeting when they announce this, we will see another big pump in the market. But we still need to see good earnings. We still need to see strong consumers. We still need to hear more about how they're going to flip in the future. So that is good news, but we're not out of the woods yet. Now, we had news today of Kraken cutting their workforce by over 1,000 people, laying off about 30% of their workforce. CZ tweeted about this, and he deleted the tweet. So I remember what the tweet said. Basically, he said, beware of exchanges that offer, 1, really high interest rates, or 2, are laying off workers. Now, he says he's not saying that there are definitely problems with a layoff, just about the risk management principles. Also, an OG doesn't mean risk-free anyway, not against Kraken or anything, just saying your critique is fair too. So, sounds like he is definitely trying to shed light on the fact that Kraken is laying off workers, also shedding light on what happened over the last few days, which is a lot of people talk about KuCoin offering really high interest rates. We're talking higher than staking can offer you, like over 100% on their platform, which caused a lot of people to be very worried about whether you can actually use KuCoin and whether they're going to be solvent or whether they're just trying to lure more investors in before going insolvent like a lot of other platforms. Now, personally, I think CZ is using the market weakness a bit to grow Binance, which makes sense, but he is shedding a light on a lot of exchanges that don't really seem to have much wrong with them. Like, a lot of tech companies are laying off workers. I don't think Kraken, just because they're laying off workers, necessarily means that they are being bad at risk management. I think it makes sense. There are less people coming into Kraken and using it. They probably need less developers. They need less people at the company because they have probably a fraction of the business that they had a few months ago, or 6 months ago, 12 months ago. And now CZ is doing this at an interesting time. Of course, he's been talking about buying up companies. They actually just bought a registered crypto exchange in Japan here today. We got announcements of that. We also are seeing how much is actually going through Binance. And sorry, I have a cold right now, but a lot of volume is going through Binance, and this is not good for decentralization. When these exchanges fall, it's great if you're someone that wants to buy the crypto and it crashes, but the fact is it's also bad for the space. It becomes more centralized, which is against the principles of crypto in the first place, and Binance is controlling the vast majority of the volume right now. They are by far the largest exchange. And now the FTX is gone. They've gained even more market share. So we don't want more exchanges to go down for a handful of reasons. Now, moving on to stock news, Tesla has a long-awaited semi-truck event that's happening tomorrow. So I think earlier in the video I said that's today. But going into this event, Tesla stock has not been hyped up at all. They've fallen down to $180, $185 and stayed there for a long time. You can see they're up 5% today on the Fed news. And I think a lot of people probably are excited because they realize that Tesla is a company that can outperform. They are going to continue to raise their revenue. They're going to continue to raise earnings per share. They're going to continue to raise cash flow. And a lot of people just have a lot of, I think, stupid reasons for selling Tesla stock, whether it's that they don't think that they're going to be profitable in the next, or as profitable as they would expect in the next quarter, whether it's that they think that Elon Musk is too vocal, whatever it is, whether they think they're too expensive just because they're at a 30 price to earnings forward. The fact is they're growing very quickly. And I did a full video on Tesla yesterday talking about why it's my top holding, and I saw one person comment underneath that the fact is it's still just too expensive. But when you look at how quickly they're growing, again, the PEG ratio, which is their PE ratio divided by their growth, so their PE forward is like 34 this year, was it 40, 50, compared to their growth, which is 40 or 50% as well. The fact is they are about at a 1, which is historically pretty cheap for companies that are growing this quickly. And when you look at their forward PEG ratio, it is very cheap. It's under 1. It's about 0.7 or so. So this company, I think, is a screaming buy. That's why I have been buying it. If you would have been in the Patreon, you could see that I've been buying it heavily. Even just yesterday, I was buying. So if you want access to the Patreon, check it out underneath the video. If you want to join moomoo and get some free stocks, check out the link underneath the video as well. And I'll see you in the next one. Bye.